Most NFL fans look at a stadium and see a football field. But when the McCaskey family looks at their new 326-acre site in Arlington Heights, they don't see touchdowns. They see a balance sheet. As of November 2025, the Chicago Bears have officially pivoted back to the suburbs. After a year of flirting with a flashy lakefront dome proposal, the state government essentially slammed the door on funding, sending the team back to the site of the old Arlington racetrack. But here's the reality nobody is talking about on ESPN. This isn't a story about where the team plays on Sundays. This is a story about an $11 billion real estate arbitrage play. The Bears are currently trapped in a financial model that is obsolete. They are tenants in a league of landlords. Today, we are dissecting the finances behind the most expensive stadium dispute in NFL history. We are going to look at the infrastructure gap, the massive property tax war holding up the deal, and why the Chicago Bears are trying to transform from a football team into a real estate holding company. To understand why the Bears are desperate to leave the third largest media market in the country, you have to look at their current lease. Right now, the Bears play at Soldier Field, but they don't own Soldier Field. The Chicago Park District does. This means when Taylor Swift comes to town and sells out 3 nights, the Bears don't see that revenue. When there is a college football game or a soccer match, the Bears don't see that revenue. They are strictly tenants. They sell tickets and hot dogs 8 to 10 times a year, and the rest of the time, the asset sits there doing nothing for their bottom line. In the modern NFL, this is financial suicide. Compare this to the Battery Atlanta model used by the Braves, or what Stan Kroenke built with the Rams in Los Angeles. These aren't stadiums. They are mixed-use commercial districts anchored by a sports venue. The goal isn't to sell tickets. The goal is to capture the spend of a family staying at the on-site Marriott, eating at the on-site steakhouse, and gambling at the on-site sportsbook 365 days a year. The Bears aren't trying to build a stadium. They are trying to build a city. Let's look at the actual proposal on the table as of late 2025. The total project valuation sits around $11 billion. Roughly $3 billion of that is the stadium itself. The Bears have pledged to pay for a significant portion of this with private money and NFL loans. The remaining billions? That is for the district. We are talking about thousands of residential units, a hotel, a gym, and retail space. This is where the ROI lives. But there is a catch, a massive one. The Bears are asking for roughly $855 million in public funds. Now, they are careful with their wording here. They aren't asking the public to build the stadium. They are asking the public to pay for the infrastructure.